Hello, Jim here. Today I have several stocks that I think are really good fits for the poor man's covered call. These are growth companies, so even just owning them, you could potentially make some really good money long term. I'm going to share with you each of these stocks, why I like them, and then I'll go into bar charts. I'll share with you what the Bollinger Band looks like, what the options volume and open interest looks like. And then finally, I'll share with you again another spreadsheet that kind of goes over what kind of returns you can look at with these particular stocks. So stay tuned. I think it's going to be well worth your while. Okay, I'm going to start with Seeking Alpha. I'm going to share with you why I like each of these companies. So the first one is ODD. It's currently right around $50. It did drop not too long ago. It's in the beauty industry. It's an AI company. They actually have some really interesting products and I think they're going to end up getting into other areas too, like facial recognition. But they are probably on the bleeding edge now. Their PE is not crazy compared to other AI stocks. 24.38 is their current PE. They're making $2.09 if we look at earnings. They had earnings on 8/4. Next time is November 6th. And you can see they're rapidly going up. I like to come over here and look at earnings estimates. And you can see $2 earnings per share for 25, then 26, 235, then 281, then 354, then 429. Then by December of 2030, they're projecting to do over $5, $5.15. So that's nearly 2.5 times where they are now. Do they have good profitability? They do, a B plus. Really good return on equity. Return on common equity is over 30. Return on total capital is over 20. Cash flow could be a little bit better, but the interesting, if you go to valuation, they don't have much debt, 22 million in debt with nearly 700 million in cash. So that looks good. Now, one of the surprising things is they don't pay a dividend. The next company I talk about does pay a dividend. Financials, I do like to look at, are they steadily increasing? So they went from 110 to 222 to 324, to 508 to 647 to 751. So they're doing a nice job. If we look at balance sheet, I'm just curious if they're buying back shares. So they're still issuing, but it looks like they issued some, then they dropped a bit, and then they issued some more. So not really issuing a lot of shares. So a lot of stuff you want to see. Momentum looks pretty good. If we come over and we look at, let's go to there. So we look at their Bollinger, well, not their Bollinger Band, their options chain. They have quite a bit of open interest, which is what you want to see. They don't have as many expirations. We want to go out to 115.27. So again, you can see quite a bit of open interest, not as much as some companies, but I've been trading them quite a while. I actually have a position in them now, and it's worked out pretty well. If we look at the Bollinger Band, we can see they're right down at the bottom of their Bollinger Band. So if you sell a long put down at 40, you should do fairly well, especially with them slowly growing. So that's Oddity. Next, we'll jump into Marvell, which is another company I really like. So hold on, let's jump into that now. Okay, the next company is Marvell Technology. They're also in the chip making business. They're a little bit expensive and not crazy expensive. Their PE is 31.42. If we come and read a little bit more about them, so Marvell Technology, together with its subsidiaries, provides data infrastructure, semiconductor solutions spanning into the data center, core to network edge. The company develops and scales system-on-a-chip architecture, integrating analog, mixed signal, digital signal processing functionality. So it offers a pretty nice portfolio. Now, if we look at profitability, again, a good profitability. Their return on equity could be better. Growth, though, is very good. You can see they're growing pretty radically. Valuation is a little bit pricey. Debt-wise, they're okay, $4 billion on $75 billion. If we look, they actually pay dividends, very little dividends, 0.27, but they do pay some dividends. Earnings, they had earnings on November 28th, so there's a little bit of time before earnings. With the expiration of 11/21, an opportunity to make trades. So it looks like they mostly beat earnings, which is good. Now, if we look at earnings estimates, they're going to do really well too. So in 26, they're going to make 280, 27, 336, almost 26% increase. 28, $4.17, 29, $5.36, another big jump. And even a bigger jump in 2030 of nearly 30%. They're going to be making just shy of $7 a share, which again is almost 2.5 times where they are now. And that's what I like to see, especially if you're doing leaps. You want to see a company that's going to be fairly bullish. Also like to look at their financials, and they're currently at $7.2 billion. They were $5.7 last year, $5.5 the year before, $5.9, $4.4, $2.9, $2.6, $2.8. Are they buying back shares? So we can look at the balance sheet. They come down to the supplemental items and 862. So they bought. It looks like it went down. So they've just recently, looks like they've done a buyback program, which is good. Momentum, B minus, so not great, but not bad. And then if we come over and we look at their Bollinger Band, let's change this to Marvell. And so they are a little bit pricey, but if they come down, or you can sell longs towards the bottom of their Bollinger Band, you should be doing pretty well because they were pretty expensive not long ago. Now, do they have a lot of options? They do. I've not had any issues trading them. So, yeah, you can see open interest in a lot of cases in the thousands. They also have a lot of expirations, which is good. So pretty much what I want to see. So at the very end of this video, I'll go into what it looks like to make trades with each of these and what the profit would look like in my spreadsheet. But next, we're going to jump into kind of a unique company. I've talked about them before, and they're probably my favorite company to trade right now, and that's Marvell Technology. So let's jump into that next. Okay, now Marvell is kind of a unique company. They are a Bitcoin miner, and they keep most of their Bitcoin. They produce quite a bit. So instead of having huge cash coming in every quarter, they take it in Bitcoin. They will liquidate some of their Bitcoin from time to time. But it's really hard to look at their earnings and gauge their profitability. Sometimes it looks a little nutty. I mean, profitability looks good. But again, it's not really taking in the fact that it's a Bitcoin company. So profitability is more related to how they're doing, how much Bitcoin they have. So here's valuation A minus, and their capital structure. You see here their market cap, and they were down a little bit on Friday. It's right around 7 billion, and I believe they have over 6 billion in just Bitcoin alone. Doesn't include all their data warehouses. And then earnings is just kind of odd to look at. Since they take everything in Bitcoin, you really can't go by the normal way of looking at earnings. And then, so summary wise, if you go back 5 years, they were a lot more expensive at one time. Even recently, they were in the mid 20s, they went up to the 30s. So I think they're a good value right now. If we come over here and we look at Marvell Holdings, and we look at let's go up to the Bollinger Band, then we'll come back here. You can see it's a little bit pricey, but is it really when it was all the way up here recently? And I can trade a lot in this area, so I trade them more than any other company. I have probably 4 or 5 Positions, I have positions in almost every account. I think in my IRA, I might have 2 positions. I have 1 position in my Roth, and I believe 1 position in my Schwab account. So they're really easy to trade. So we're right at the top end of the Bollinger Band. But I think this Bollinger Band probably doesn't represent their true value. If you took, and I had ChatGPT do this, I took what their Bitcoin was worth, what all their data warehouses were worth. They also had solar farms, and they're a low energy producer. And if you take their assets into consideration, their market cap is way below what their assets are worth. So just something to consider. And if we look at option prices, it's relatively easy to trade them. So you can see here, they've got thousands upon thousands of positions, and they have lots of expirations, and they're inexpensive compared to a lot of these other stocks. So if you have a small account, you're doing the wheel. I do the wheel with Mara. I'm looking at doing the poor man covered call. And again, that's what I'll share with you, you guys at the very end. But it's worked out really well. So here you see thousands upon thousands of open interest. Volume is quite big. So next we're going to jump into kind of how I'm analyzing these 3 companies and a little bit more in depth on how you look at a poor man's covered call. So hang with me. Let's jump into that last section. Okay, here's another new spreadsheet that I did. I changed the format because I felt like the previous one I had done was a little bit hard to follow. So I think this one will be a little bit easier. Now, I did want to mention before I jump into this, I am having a trader club meeting tonight with my members, and we're talking about leaps. I do have an area in Discord where people share leaps. They talk about leaps. They talk about what they're doing, and how they're approaching leaps. I have quite a few areas in Discord. I have areas for 0 DTE futures, all sorts of different types of trades. Also, lots of areas for learning the economy, economic briefings, and so on and so on. If you want to learn more about my membership, take a look in the description. I do have a lot of people joining, a lot of people sharing trades. I do tell people if they take my trade or one of the members' trades, try to make it better, try to find better strikes or make it work for you. Maybe it works differently for you. Maybe you take less risk. Maybe you take more risk. Maybe you want to do 4 contracts instead of 3 or 1 contract instead of 2. So I always tell my members, kind of look at it and determine what works best for you. Nothing is guaranteed. My trades have been working for me. I've been very successful with it, and I'm making improvements along the way and becoming more and more successful with it. And in the process, trying to take less risk, because I do think we're going to get a correction here at some point. It's not when, it's not if, it's more when. So what I did is I broke these down. Here's ODD, here's Marvell, and here's Mara. So here's the current price of each. For the long puts, I did the 115.27 expiration. These were the strikes. So one for Oddity Tech, $40. For Marvell, $65, and then for Mara, $15. And these were all at right around the 80 delta, or the delta that was closest to 80. And here you can actually see the deltas that I used and what it cost me to buy 1 contract. So $20 for ODD, $33.50 for Marvell, and then $9.60. And then I just multiplied those by 100, just so you see, well, to buy a leap for ODD is 2,070, 3,350 for Marvell, and 960. So the beauty is if you buy a long leap, if that stock price keeps going up, that leap will also go up. So say that stock doubles or triples, goes, I'll give you an example. Let's say Mara goes from $19.57 to $70. Well, that leap, that long call that you purchase will also go up in value, and it'll go up because the call you purchased was so deep in the money, it's almost going to follow the price. So if it goes up $40, it'll probably also go up $40. So it gives you the potential to make a lot of money without putting a lot of cash at risk or a lot of capital at risk. So all of these, Mara, if you have a tiny account or a small account, it can be done on any size account. ODD can also be done in like a $5,000 or $10,000 account. Now the short calls all expiring in 11/21. These were all in 20 deltas, typically the mid to higher part 20 delta. I believe all of these only had 120 delta. Maybe the exception was Mara, but so for the short call for ODD, you pick up $1.60, you pick up $2.50 for Marvell, and you pick up 97 cents for Mara. So what does that come down to? Again, if you multiply it by 100, you can make 160, $2.50, or $97. Of course, $97 being for Mara. And what does that look like on a monthly basis with the required capital that you spent? So pretty good. It's 8.38%. That's just based on the total cost, the income, the total premium coming in for the covered call divided by the total cost, which is subtracting out the premium you did make with that covered call. So your cost basis, it's 2,070 minus the 160 that gets you to 1910. Now, if it got assigned, and that's what happened to me with several of the positions for the poor man's covered calls, like I did one on Palantir, and it shot through the roof and it got assigned to me. So if assignment occurs, I'd pick up $2,000. I would have made a $90 profit if that happens, which is like a 57% ROI. So still doing pretty well. Now, the likelihood that that would happen the first month is fairly small. But maybe, I think with Palantir, it happened like the third month. So my return was much higher because I was able to keep knocking down that cost basis. Now, Marvell is even a little bit better. So I brought in, for it, if you made this trade, you bring in 250, and then the monthly return was 806. So the cash flow was a little bit less. But you can see, because of a $100 short strike here, if it gets assigned to me, I'd pick up $100 per share, but then I would have to have the long calls called to me. So I would take out 65, and that's how it comes down here to 155%. So it's the 400 for 1 month. These are based on 1 month, the ROI. Annualized. So if you could do that every month. So if this happened, it got called away from me, then I called the shares to me. That's the amount of return I would make in 1 month, and I could do that potentially the next month. Now, the other thing is you don't really have to take assignment. A lot of times they won't be assigned, but as they get close to expiration, you can close them for a really nice profit. And that's what I did with Palantir. Finally is Mara. Now, Mara is really surprising because you're only putting a small amount at risk, 960. You're bringing in almost $97, or right at $97, which is 11.24 monthly return on the invested capital. And then if it shoots through the roof, which is more likely than the others, can it get to 26? Well, it was at 26 not long ago. So it could shoot to 26, and you could potentially make a quick profit on it. So you would pick up the total gain if a sign would be 1,100. So the return in 1 month would be 237. And the return on investment annualized would be nearly 330%. Now, again, most likely it wouldn't happen the first month. You might let it expire the first month and then sell a covered call again the next month, or you may roll it, up and out. I don't see Mara moving like Palantir did, but it could. So what are the notes? Assigned at short call strike and called at long call strike. So that's pretty straightforward. So if you sell a long call, a short call, meaning the covered call at say 100, but you had purchased the long call at 60, it's just the difference of those two. You could also sell if deep in the money before expiration. And so as that long call gains value and the short call gains value, you have kind of locked in your profit. So if it shoots through the roof, you could sell that long call and buy the covered call, and you'll still get a really good return. And then each month you go higher with the covered call. If it shoots up like Palantir, you are still profitable. And realistically, what I would see happening is you would be able to increase it. So if Mara went up to 22, you could roll it, maybe you have to go 2 months and you take it up to 24 or 23 and you slowly roll it up. So then at the end, you have a long call that is really deep in the money, like 15. And then maybe you have a short call or covered call. They're able to let expire, or you can close it for cheap, so just something to keep in mind. Each month your return gets a bit better, and that's what I was talking about. And both the covered call and the leap increases in value. So it's something I'm looking at doing. I probably will do it with Mara maybe in the next week or two. If we get a correction, this is one of the type of trades I would do right away. Say the shutdown keeps on going, and this week or next week or this coming up week or the week after, we get a real hit to the market, then that's a great time to do a poor man's covered call. So let me know what you guys think. Is this something you're doing? Do you have certain names or companies or ETFs? I shared before in a previous video other ETFs that I like to do. I like to use SPY, XLK, IWM. I also like all those for doing poor man's covered call. So, and again, as always, thanks for taking the time to watch, and hope you have a wonderful evening.